Hi, this is Jeff Tucker, Principal Economist at Windermere Real Estate, and this is a local look at the May 2025 data from the Northwest MLS. Last month, we saw a sudden pullback in pending sales, and those chickens came home to roost with fewer closed sales in May. Many of these impacted closed sales originated from contracts signed or not signed in April following Trump's Liberation Day, when the stock market had dropped sharply and a lot of buyers paused their home searches. Now, we've seen the stock market fully recover by May, and while it's still a little too early to tell, there are indications that the housing market is also getting back on track. So, what we're looking at here are the four key metrics I watch to track supply and demand in the market: closed and pending sales, which tell us a lot about demand, and listings, new and active, which tell us a lot about supply. So across the Northwest MLS, closed sales of single-family homes fell 3% in May from their year-ago levels, after growing 1% in April. Pending sales, though, which are more of a real-time demand indicator, were flat from last year, a promising rebound after falling 4% year over year in April. On the supply side, about 13% more new listings hit the market this May, and the tally of active listings ended the month 39% higher than May 2024's inventory. That means buyers are still seeing a lot more options than they had last spring. There is one little glimmer of an inflection point here, which is that the year over year growth in inventory has finally stopped getting higher and higher month after month. So that year over year change was actually a little bit smaller than last month. So it might be the beginning of kind of a turning point in the trend. Now, finally, the median price for all those closed residential sales actually ticked down slightly in the month of May from last year. It fell 1% to $677,500. So it seems like that extra inventory and cautious buyers have brought price appreciation to a halt for now. So putting that all together, closed sales and home prices did step down slightly from last year at this time, which we were expecting after the weak demand signals that we saw in April's data. But the pending sales data suggests that buyers started coming back in May. All right, now we'll dig into some details for the four counties encompassing the greater Seattle area. So starting with residential closed sales, those dipped even more. They dipped 7% year over year here in the four-county region, led by a really sharp 14% drop in King County, which encompasses Seattle and Bellevue. Closed sales dipped 2% in Kitsap County, climbed 2% in Pierce County, including Tacoma, and they climbed 1% in Snohomish County, which includes Everett. So those three counties other than King actually held up surprisingly well, given that all four counties had seen sizable pending sales declines back in April. So maybe outside of the core region, some of those buyers came back and closed quickly in May. Similarly, if we look at median closed price, King County saw the only median sales price decline by about 1%, which brought it back down just below $1 million, while median prices kept climbing modestly in Kitsap and Pierce counties and really just barely climbed in Snohomish County. Now, looking ahead, pending sales dropped only 0.8% in the four-county area, about 1% down in King County, down 4% in Kitsap, down 0.7% in Pierce, and up 0.8% in Snohomish County. All in all, they're basically flat from a year ago across most of the region, which is a strong indication that local market activity has rebounded a bit after that shock in April around the new tariff announcements. Now, on the supply side, inventory is continuing to grow here as well. So the four-county greater Seattle area had over 8,100 active listings at the end of May, up 45% from the same time last year. And just like in April, the inventory growth is especially dramatic right now in King and Snohomish counties, where listings are up 58% and 54% respectively. Kitsap inventory is only up 8% year over year. So all in all, this report confirmed that greater Seattle region buyers did step back in April, but it gave some promising indications that buyers returned at nearly year-ago levels in May. Economic uncertainty is still the watchword, and mortgage rates have unfortunately settled in at a higher range of around 7%. But buyers shopping now will definitely benefit from the most inventory they've seen in years, helping them find the perfect fit, all while facing less competition from other buyers than we've seen in recent spring selling seasons. All right, that is all I have for this month's local look. Thank you so much for tuning in.